Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report with Alpari, where we will discuss the current situation on the market. I will tell you what's going on the charts right now, what's driving the markets from the fundamental point of view as well. So we will start with fundamentals as always. So what do we have here? We are still digesting the interest rate decision from United States, which happened Wednesday evening. We are also under the influence of the interest rates decisions on Thursday, where we had quite a lot of them from Great Britain, from Japan, from Switzerland, etc. So what we got, we didn't have our daily analytical report yesterday, so let me tell you what happened on Wednesday. We had slightly less hawkish Fed. I won't say dovish, but the reaction which is now seen on the market can be considered as very dovish. As a reaction on very dovish statement, but in my opinion it was just less hawkish than it was anticipated. Right, so we got a rate rise which was expected. It was fully priced in, so what we got here was also a buy the rumor, sell the facts kind of action. So that is why when you rise interest rates, well, the currency should be stronger, but it wasn't, because it was just selling the facts. Combination of both, selling facts and slightly less hawkish Fed, right? So it influenced all pairs with dollar. It influenced also all commodities, which are much stronger at the moment. On the Thursday, what we got was Bank of England. They didn't change interest rates, but we had some hawkish comments that they should do that sooner than the market thinks, and that is why British pound was a little bit stronger. Well, not a little bit, but vastly stronger after this decision, after this comment. On a pair with euro, we are on long. We are not advising. We are not on long position, but we are anticipating for the price to go up. And we created that analysis when the price was on a very bottom, straight after the reaction on that interest rate decision. And after that, the price rebounded. The price went higher, significantly higher, but then made a few pips and then went down. But we are still above the horizontal support. Let me show the charts from the fundamental, from the calendar point of view. We won't have anything significant, but let me show you maybe the calendar first. But there's a beautiful formation that is now emerging on the chart of euro dollar. I hope that you can already see that here, and you already know what I'm talking about. Right, so this is inverse head and shoulder formation, left shoulder, head, and right shoulder. And if you're wondering why we bounced why we bounced now, well, technically it's a bounce from the neckline. Well, you can consider horizontal resistance neckline, you can consider this pink line, but anyway, what we're having here is an inverse head and shoulder formation, but I will show you that in a second. First, let me introduce you the macro calendar. As always, we first check the macro calendar. You always need to check macro calendar before you will start trading. Excuse me. All right. Should be broadcasting. I hope you didn't lose anything. We should be good. So let me. All right. Let me show you the calendar. You just give me a second. All right, now we are seeing the calendar. So what we are having for today is not very busy day. Well, we just we're just gonna slowly calm down after that what happened yesterday. As you can see, no 3 exclamation marks data today. So let me show you what will happen next week. Right, next week, Monday, PPI from Germany, but apart from that, nothing interesting. Reserve Bank of Australia, meeting minutes. Also CPI from Great Britain, actually a very busy day for British pound. All data published at once. On Wednesday, minutes from the meeting from Bank of Japan, non-monetary policy ECB meeting, interest rate decision from Reserve Bank of New Zealand. So also eventful day. On Wednesday. On Thursday, speech from Janet Yellen, a pack of data from UK, and a pack of data from housing market and United States. And on Friday, a lot of data, but nothing significant. Well, CPI from Canada, PMIs from Eurozone, from Germany. So this, and from United States. So this week was very eventful, right? We had lots of events, significant switches, changes in the trends. But the next should be more or less just a continuation of the current trends. Okay, so now let's turn on the charts. I'm sorry. Let me show you the charts. All right. Let's extend that a little bit. Yeah, so we do have charts right now, and this is euro dollar. This is euro dollar with an inverse head and shoulder formation, right? It's a long-term chart. This formation started to emerge in November 2016. And it can be something huge. It can be something huge. It can be a game changer in the situation of euro and dollar. But so far, we do not have a buy signal, a long-term buy signal. We do have short-term and a mid-term buy signal, but we don't have a long-term buy signal. Why is that? Because we are still below the neckline, right? So this is possibly something huge in the long term, but for a buy signal we have to wait for the price coming back here. But in shorter term, what I would like to show you is the euro dollar, which broke from this horizontal resistance here on last Friday, right? On Monday and Tuesday we had a correction on Wednesday as well. I thought they're gonna bounce from this horizontal resistance, but they created a correction equality movement here that can be considered as a false breakout, and the price created an inverse head and shoulder formation, left shoulder head and the right shoulder. So here in one place we had a breakout of a neckline, we had a comeback after horizontal support, and we also had a reaction on the Fed's decision and reaction on their economic projections. So we had a nice 110 pips movement. After that, the price, you don't see me too often getting into the 15-minute chart, but what we got after that was a rectangle formation, which is a trend continuation pattern. The price advanced higher at the end of the yesterday, and now we can see that we're having a small correction of this movement. Let's see how deep we can go in correcting this this movement. I'm gonna remove this rectangle, and you can see that this looks like a very interesting place for a bounce. Here it's both 38.2 Fibonacci level, and in the same time it's recent support created by those two lows and by this top here. So the closest short-term, mid-term scenario is the price getting there and bouncing from this point, probably testing the neckline of the long-term inverse head and shoulder formation again. Right, so as long as the price stays above this line, and most probably above this one, right, I would say that the sentiment is still bullish. Well, we do have we cannot set a clear trend line, right? We do have two lows, but they are not easily connected. Maybe like something like that, right? As long as we stay above here and definitely above the pink line here, the sentiment is positive on euro dollar. Even with this decline from today, the sentiment on euro dollar stays positive. Next instrument I would like to show, oh, we just got an upswing, beautiful, is Australian dollar to American dollar. So here for a long time we had an upswing here. We had an upswing here. The price was making those correction inequality patterns. After that it snapped, and finally we got a bigger correction. We retraced 38.2% of the recent upswing. We also created a flag. Flag is those blue lines. Flag is a trend continuation pattern, so we were expecting the price to break the upper line of the flag. Also, in the same time, what price created here was inverse head and shoulder formation, which was supposed to end this downswing. So we had a combination of two different trading patterns giving the same signal, right? The same in terms of the direction, but one was a trend reversal pattern, but it was reversing this movement, and one was trend continuation pattern, which was continuing this movement, right? So they both were giving a buy signal. And also, look at that, the buy signal was actually triggered before. It is Wednesday, but the buy signal was created in the morning of at the beginning of European session. During the FOMC, it was just another leg up, obviously significant and a huge one. But the signal itself, the buy signal itself, was triggered before that, somewhere here, once the price broke the neckline and broke the upper line of the flag. After this upswing, what price created on Thursday and the first part of Friday is a flag. As you can see, those pink lines is a flag. Flag, you know, is a trend continuation pattern, so that is why we got an upswing as expected, and we should get the price here on this resistance, which is 30-40 pips higher. Why this resistance? You will be able to see that on a daily chart. It was a resistance here, 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 and here. So here we do have a kind of like inverse gravity. So this resistance is attracting the price. Traders want to check how this level works, and most probably they will aim it. We should see a small bounce here because most of the traders will probably take profits from those movements. So we will see how it goes, but there are higher chances of getting there than to this support. Instrument which is highly correlated with Australian dollar to American dollar is with Aussie, it's gold. Gold was having a terrible March. As you can see, since the end of the February, the price was falling down. Well, not whole March, but first half of the March, right? The price retraced almost 50% of this upswing, right? So we can see that this upswing was built for over 2.5 months, and it was retraced in a half a month. Half of it was retraced in a half of month. And what we are seeing in 2 weeks, yes? What we are seeing here is a pennant. A pennant resulted It should result in a trend continuation. It resulted with a trend reversal. So this pattern was broken. The price came back above $1,220 per ounce, which was a very important resistance. And the price came back above this resistance. And now most probably we will aim the closest resistance here on $1,247.48 per ounce. Is this resistance important? Well, we can see here it was a support. In October, it was a resistance. In the first half of February, here you can see a false breakout, but most probably we will test this level again, and most probably we'll have 3 consecutive bullish days, which creates an opportunity for a further upswing. So it was very dangerous on gold. It was buy signal was off the table definitely, but the buy signal is back on the table right now. So we can think about opening long positions again. As long as we are here on this account, I will also show you DAX. Classic. We made another higher highs. I actually don't know how to comment the situation on stocks. They are just buying every single dip, right? When they see dip, they buy. Simple as that. It's all the reversals seen on the market are very sharp, and price is just pushing for new highs, and going against the trend is very, very risky at the moment. Definitely there are higher chances for the price going up than down. I would say that we will have a chance for a bigger correction once the price will break this support, but we will have to wait for that. Let me show you also oil. Oil, after touching 50%, well, and dropping a little bit below 50% retracement of the recent upswing, stopped. So what we are having here is a kind of a side trend. Some may see here an inverse head and shoulder formation, but I wouldn't be so sure about that. For me, it's more like a trend continuation pattern, right? This bottom is bad to deal with, because I would draw something like that. But as we do have this bottom, I cannot draw this line. But in my opinion, it's the price will just fall eventually, right? Not maybe tomorrow. We can even test this resistance, but eventually the price will go. Price of oil will go down. Maybe not this week. Well, definitely not this week, but maybe next one, maybe next month or 2 months from now. We'll see. So now let me turn on the other account. On this account we made some trades. We managed to earn some money. This is my second account, not the main trading account. And on this account I'm making some trades for the forthcoming seminar in Philippines that we're gonna have next week. So that is why this account is growing. It's around $1,000 bigger than it was recently. So let me start with euro to British pound. As you can see, well, there was a beautiful hammer here. Why this hammer was beautiful? Because it was created after the buy signal here was created, and the buy signal here was created because the price bounced, broke the upper line of the symmetric triangle formation, also denying this head and shoulder formation. They bounced from the trend line, they broke the upper line of the symmetric triangle, so the buy signal was present, and the price created this hammer candlestick, bouncing with a tail from the support. Alright, fair enough, that was beautiful. But as you can see, after that we got this decline here, and the price fell sharply, and we wrote this analysis about the possibility of price going up somewhere here. so more or less on the same prices as now. But as you can see, from reaching the bottom, we got like 20 pips stop loss, we went 50 pips higher, so significant movement up. So far it's just a trend continuation pattern. We shouldn't be worried about that. Look at that. We have a strong upswing, and the price didn't even retrace 38.2 Fibonacci level. For me, it's like a golden support always. If we have a trend and we don't even retrace 38.2, it means that the trend is strong, and the correction is rather flat and limited. Euro to Australian dollar. Here is the real roller coaster, but there's an interesting situation because we saw this inverse head and shoulder formation, right, which fueled this upswing. Then this upswing stopped on head and shoulder formation here, left shoulder, head, and the right shoulder. But actually, this can be a part of a bigger head and shoulder formation here. So left shoulder, head, and a right shoulder. A neckline of this big formation is here. So first, we need to break the trend line, which now is used as a support. As you can see, we do have a small reaction here, stopping this big downswing. But first, we need to break this neckline, and after that, we can think about breaking. Well, we have to break the trend line, then we can think about breaking here is the trend line. We're thinking about breaking the horizontal support, right? What we're having here is a flag in a downtrend, should result in a trend continuation. The long-term trend is negative on Euro to Australian dollar, as we can see here. So yes, we had a good time with this reversal. We also traded that. We made money on this, but it looks like the party is over for now. Euro to Japanese yen. Here was a beautiful buy signal. I really enjoyed that. Why is that? Because we're having an uptrend, right? Uptrend, higher highs, higher lows. We had a correction, which is a wedge. Wedge ended with the small inverse head and shoulder formation, and then with a bigger one. And also here you can see that head itself of a bigger inverse head and shoulder formation is built by head and shoulder. So a situation similar to this one, where head of head and shoulder formation is built with a smaller head and shoulder formation, right? Kind of an inception. But what I would like to show you was the setup from yesterday. So a hammer candlestick, two hammer candlesticks, two candlesticks with long tails bouncing from a neckline and from a trend line, and this was very powerful signal that gave 80 pips. We had this position, we already closed that. We had this position, and it's very good. It was a very good trade, right? Most probably, well, this downswing seen now is not very enjoyable, right? But as long as the price stays above this horizontal support, the sentiment here stays positive, right? So most probably those lower prices should be used by buyers to open new long positions. I wouldn't be surprised if that happened, if that actually happened. New Zealand dollar to Japanese yen. Here we don't have anything interesting, as you can see, for the past for the last 2 weeks. Since we broke the support, we have a sideways trend. Obviously, we made new local lows because the sell signal was created here, but the price is more or less moving sideways. Here we had an interesting situation where we do have a position right now where we posted, where we had a sell stop. Sell stop triggered by the price going there, and it opened as a short position. Why we had a sell stop here? Because it's a decent support here, and it was proven especially in the past few days. It was proven here and here, so we anticipated that once we'll have a breakout, this fall should continue. So far the support is defended, so this can be false breakouts, and if it is a false breakout, we will be punished soon. But as you can see, the loss expected here is very low. It's not even 1% of our capital, so everything is according to good risk to reward ratios in our risk control and money management. So no worries if it will happen, but generally look at that, the price making lower highs and lower lows, and this trend should continue. Canadian dollar to Japanese yen. Here the price should aim lower. We should get lower anytime soon. This support will be, this trend line should be broken, this horizontal support should be broken, and we should see the price aiming lower. American dollar to Japanese yen. So far this can be considered as a false breakout. The price is falling down. We crashed through a few more or less important supports. We had this one here, which will be the closest resistance. We had this one here. So the sentiment here is rather negative. Australian dollar to Swiss franc. I'm going to remove this position. American dollar to Polish zloty. Here we finally touched 3.99 level, which we expected for the last 3-4 weeks. We started talking about this somewhere here, that the price should get there soon. We continued the sideways trend, so we didn't move up, right? Because it wouldn't be anything significant if the price went here and after that the price would go here, right? But the price was going sideways trend, and instead of breaking the resistance, it went down aiming support, and we actually made levels 3.98 below 4 zlotys for a dollar. So we got a movement that we are anticipating and expecting. American dollar to Mexican peso. Very interesting situation is that, look, we bounced from a long-term trend line which started in April, and what we're having here is a bounce, and bounce, not just a bounce, but the bounce created with a hammer, right? This is this bounce, this is hammer. We should expect at least a small correction aiming this resistance, or this midterm trend line. Maybe it's not great in terms of risk to reward ratio, but it's definitely an interesting setup. If you like to trade bounces from the trend lines, this is the situation for you. And last but not least, what we're having here is Australian dollar to New Zealand dollar, where in the last week we were telling you about the possibility of a long position here, because we had this inverse head and shoulder formation, and we broke the trend line, long-term trend line, and we are having that. We are having 3 bullish days in a bullish weeks in a row. We had a nice continuation, and the price is going higher, and not next week, not 2 weeks from now, but we should see the price getting here 300 pips higher, maybe next month, maybe in May. But generally this breakout of this trend line sets the bullish sentiment here, and the price of this should aim higher. Okay, so you can see that we got some nice trading signals, nice trading setups. Fed helped us a little bit with the market movements. We are enjoying what we are seeing on the platform right now. I hope you're enjoying that as well. Thanks very much for watching Daily Analytical Report. Remember that trading and investment in financial markets involves an element of risk. Also, if you're looking for more information about potential setups on the market, you have to see our Twitter account, Alpari Array, and our website, alpari.news. Thanks very much and goodbye.